The Jared Dillian Show.
I'm Jared Dillian. This is the Jared Dillian Show. If you want to call to talk about your money, please call 844-305-7800. That's 844-305-7800. This is the Jared Dillian Show. Not off to a great start there. I had something in my throat. I got a fantastic story for you. I mean, just amazing. So here we go. Now, as I've said before, my wife and I have always wanted to build the dream house. So we've been talking about this for years. We live in South Carolina. And what we thought that meant was, this was our vision. We would buy like 20 acres in the middle of nowhere, like out in Conway or Aner or off of like Highway 90 or 905, and just, out in the country. We'd buy 20 acres and build a giant house and live out in the middle of the country. That's inconvenient for a bunch of reasons. The biggest reason is you're far away from everything. So it wasn't really a great idea, but that was our idea. So this was back last year, September, October, something like that. We're in the living room. My wife has her laptop out and she says, honey, come here. Look at this. So I look at her laptop and she has a listing for a piece of land in Pawleys Island where we live. And I'm looking at this. I'm like, is this right? This doesn't make any sense. So the land was about 9 acres, very close to the beach, like, a BB shot from the beach. 9 acres, had a pond on the land in a nice development, like the nicest development, and it was listed for $480,000. I looked at her, I'm like, that's mispriced. It can't be the right price. So it was the right price. So we're like, well, do we want to do this? Do we want to buy this land and build our dream house? And we're like, yeah, sure, let's do it. So we contacted a real estate agent and, we visited the land, we walked around it, and we did our due diligence and checked out all the surveys and stuff. And then we decided to bid on the land. So our opening bid, remember, it was listed at $480. Our opening bid was $437. By the way, if you're ever negotiating for a house, 7 is a magic number. Okay. Because the real estate agent's plan, she's like, let's bid $440. And I'm like, no, this is what's going to happen if we bid $440. They're going to come down to $470. We'll go up to $450, and then we'll meet in the middle. We'll meet at $460. Never meet in the middle. So one of the ways you do that is to use a 7. So by bidding $437, it's sort of a psychological trick, but what it communicates is a desire not to meet in the middle. So they came down to $458. We came up to $450, and then we met at $453, which was not in the middle. So we got the land for $453,000, and I paid cash. So, now we took a couple of months and just didn't do anything. And of course, now we're talking to an architect and stuff like that. But I haven't really thought about the value of the land in the last 6 months. I'm basically carrying it at book value. I just figure it's worth $453, and there's been a big housing boom, and I didn't really think about how that could affect the price of the land that we bought. So over 4th of July weekend, I was on the beach with a group of people, and it was all new people. I was meeting new people, and one of the people was an appraiser. So we were talking about real estate and stuff like that, and I said, look, I bought this lot in this development, 9 acres for $453,000. I told him the whole story behind it, and he said that land has more than doubled from where you bought it in 6 months. It is more than doubled. So if it doubled, that would take it to 906. So, if you say more than doubled, then maybe it's worth $1 million. Maybe we've made $550,000 on this in 6 months. Holy crap. Couldn't believe it. So I've had some discussions with people in the last couple of days, and they're like, some people are like, well, you should flip it. You should just sell it. Okay. Which would be a nifty trick. Okay. To buy a piece of land for X and sell it for 2X in 6 months. That That would be a nifty trick. But we don't want to sell it. We want to build on it. We want to build the house. But nonetheless, we have a paper gain of, give or take $500,000 on the land. So more than doubled in 6 months. So one of the things I say over and over again on the show is that I am the luckiest person in the world. Okay. Doesn't mean bad things don't happen to me. And from an investing standpoint, I've for sure made my share of mistakes over the years. I've done some dumb stuff and I've lost money. But, sometimes it seems like everything I touch turns to gold. Now, in this particular instance, we identified a mispriced asset. It was absolutely mispriced. And that's what the appraiser said. The appraiser said the price was too low. So we took advantage of it. And what does that mean? Well, we had a better ability to evaluate the value of that land than the sellers. Okay. And the sellers bought and held it for 12 years. They intended to build on it and they just changed their mind and they were just in a hurry to get rid of it after 12 years. So, they were what you would call a motivated seller. But even though I'm lucky, what did I do right in this scenario? What did I do right? Well, I took risk. That was the right thing to do. I took a risk and it paid. Sure, it could have not paid off. But, we're looking at this and we're like $55,000 an acre near the beach in a super nice housing development. That doesn't seem like the right price. I could have played it safe. I could have chickened out. I could have said, no, I want the cash in the bank, but I took a financial risk. Now, keep in mind that I spent 10 years as a trader and I've been working in markets for 22 years. So I know when something is cheap and I know when something is a good deal, and that was an incredible deal. Also, and this is the most important part, keep in mind that we are in an inflationary environment. So what do you want to do in an inflationary environment? Well, you want to buy assets in an inflationary environment. You want to buy stocks. You want to buy real estate. You want to buy commodities. You want to buy stuff. And you should have a bias against holding cash. Okay. You want to turn your cash into assets. You buy assets and they go up in price. That's what happens when you have inflation: stocks, commodities, and real estate. So I do want to talk about risk taking for a minute. That was a large financial risk that I took. That was a pretty big risk that I took jointly with my wife. She also contributed. $453,000 is a lot of money. It worked out, but it might not have. When I bought the land, I said, I think it's mispriced. I think it's worth more. That might take 5 years to play out. It played out in 6 months. Pretty much after the inauguration, everything went ballistic, especially the real estate market. And I didn't predict that was going to happen. I didn't think it would double in 6 months, And this is also a statement about the importance of buying cheap stuff, cheap assets. I'm a value investor. Deep down, I'm a value investor. I like buying cheap stocks. I like buying cheap real estate. I like buying things that are undervalued. And when you buy things that are undervalued, you have a margin of safety. So the other point I want to make is if you have debt, it becomes very difficult to take risk. And we are debt free. We don't even have a mortgage on our house. We are debt free. No debt and lots of cash. So it's tough to lay out that much capital on a piece of land if you have debt, if you have mortgages and car loans and credit cards and stuff like that. And we've talked about that before. But it's also tough to spend that kind of money on a piece of land if you don't have cash. And by the way, what have I spent the last 2 years talking about on the show? Cash is an option to buy something cheaper in the future. Cash just sits there like a big pile of opportunities. Cash is options. The option value of cash. It's very important to have 20% of your money in cash. Doesn't matter how excited about the stock market you are, how many stocks you want to buy, it is important to keep cash in reserve to take advantage of opportunities. So, plus it was cash in the bank, not the brokerage account. I mean, that's a distinction, because if you have it in a securities account, it's an extra step to wire it out, and there's some psychological issues with doing something like that. I'm a big fan of rolling around with a bunch of cash in the bank. 20% cash is what I recommend, even in a low interest rate environment, even when there is inflation. If you are fully invested, you can't take advantage of these opportunities because you have to sell stuff to raise cash, and then there are tax consequences to selling stuff. And again, luck is definitely playing a role here because I am the luckiest guy in the world, and whatever I touch turns to gold. And yes, I have had my share of bad trades, but I am so lucky. You could make the argument that I should be taking more risk. In this environment, we should all be taking more risk. Or is it too late? Was the pandemic our chance to buy and now it is too late? That's a legitimate question. When it comes to real estate, as long as interest rates remain low, I think real estate is going to do just fine. As long as interest rates are low, all asset prices are going to do just fine. Keep in mind the divergence between Fed policy and the actual economy. The economy is on fire and the Fed still has its foot on the gas. That might be changing soon, but it's kind of tough to plan around. The Fed moves very slowly, so I think we have a chance. I'm Jared Dillian. This is The Jared Dillian Show.
The Jared Dillian Show.